And now time for, I guess, long awaited, because everyone here is looking forward to a vibrant discussion on a relevant topic. So let's start it. Our first round table of the day, challenges of seed funding for blockchain startups. The moderator of the panel has been ready for the past 20 minutes. Tom, join me on the stage. Please welcome Tom Kopera, blockchain investor and evangelist, serial entrepreneur, works with Polish blockchain founders as a strategic advisor, helping them with seed funding, growth hacking, and product development. He cooperates with VC funds across the world, sharing deal flow and investment insights. We also have Boris Musielak joining us. Boris, please join me on the stage. He's an engineer turned entrepreneur turned investor, founding partner at Smart Ventures, an early-stage venture capital firm bridging Silicon Valley to Poland and the CEE region. Next up, we have Bartek Pucek. He's joining us online, and we should hopefully have a connection already. Bartek is an angel investor at Ramp Network, My Container View storefront. He's author of Pucek.com, a newsletter at the intersection of business and technology. He's also an alumnus of Stanford Graduate School of Business in Strategic Management. Bartek, I hope you can hear me well. Hello.
Yes. Hey, everyone.
Wonderful. Great to have you with us. We have Miko Matsumara. Miko Matsumara, blockchain investor and unicorn builder. Miko is a general partner with GCC, Gumi Crypto's Capital, a Silicon Valley investment fund with over 500 million in assets, including early-stage investments in unicorns like OpenSea, Yield Guild Games, Celsius Network, Vega Protocol, Curido, Agoric, Astar, and 1inch Network. Szymon Przybylski is also joining us. Szymon is a long-time entrepreneur in technology, with him first making his mark in European e-commerce for the past 5 years. He's been in the cryptocurrency industry. Currently, he's the CEO of Luart.io, the largest marketplace for NFTs on the Terra blockchain, with a turnover worth several $1 million a month. Tom, as ready as you can be. Enjoy.
Absolutely so. The fundraising, it's a hot topic. The way I know it is because yesterday there was so many questions. So many of you approached me actually asking about the fundraising. I know so many of you struggle with that and are keen on listening to some answers. And today we're going to provide answer with the most prominent people in that space. As introduced, Simon has just raised a round of $5 million. Like Miko is managing the fund of $100 million plus in San Francisco. Boris is bridging the Silicon Valley investors to Poland. And Bartek as angel investor with an exceptional taste, being early in the Ramp Network or My Container, among others. It's going to be a lot of insights today. So, shall we start? I guess so. Simon, it's easy to raise tons of money for crypto startups. True or false?
Both, I would say. Basically, in my opinion, raising funds is something easy to say, because most of the funds is going to, as you know, you are not a new startup and they want to give you the money basically. Because we need to choose proper VCs, angel investors, and nowadays we can choose two options of raising funds through IDO platform, for example, starter from Polish company. And another one is VCs or angel investors. And it's a problematic thing because we get tons of, as a Luart, we get tons of messages per investment, but we talk daily with, I could say 5 VCs per day, and I would choose from them 10 that they are worth to invest the money that they are investing to. And the question is why? Because good money is something critical to me, that they will be the long-term support for the project, not that just the dumping VC that they can ruin your product in long vision. So, in my opinion, raising funds is the money is in crypto is easier to raise, in the normal way, the normal world, because basically, but in my opinion, raising good funds and having the good exposure on good VCs is hard to say. In my opinion, it's hard to find good VCs that they want to invest into you.
Okay, let me then rephrase the same question for our investment panelists. Is it easy to spend, to invest actually tons of money for the startups in blockchain?
So from investor perspective, it's quite difficult to deploy capital. I think capital itself is abundant, so it means that venture investors have to add additional value. And I think today the scarcity is qualified entrepreneurs.
Hell yes. I can only agree. Anyone wants to add, Bartek?
Yeah, so hi everyone again. So I can only support what Miko said. I think there's a lot of money right now being fundraised by a lot of startups and a lot of crypto/Web3 teams. But what is really missing is the real problem-solving perspective, like building products around an existing problems. Most of the ideas that are flowing around are putting existing solutions on chain and not trying to solve new problems. And I think that is one of the biggest mistakes that a lot of projects, products, and founders or founding teams are making. There's a lot of capital out there. Some of the runs for some of the startups are 3 or 4 times oversubscribed, and then founders are able to pick the right set of funds, whether they want, a purely, let's say, Web2 fund, or a mix of a crypto native fund, and then, for example, angel investors, and then also do an IDO. But it all comes down always to solving a real problem, so that if that problem is on chain, then it's still going to be solved for the customer. And I think that is one of the biggest, basically right now, problems around that. It's not money. It's like, what do you really want to build, and what type of problem does it solve?
All right, so the way I understand it, just Miko said, it's not easy to deploy a lot of capital because of the quality of founders, among other challenges. So I can imagine that your daily job is seeing and going through many pitch decks, many white papers and light papers as well, which tells me that if it's not easy to deploy a capital, then a lot of founders are making a lot of mistakes, right? So the question would be, what are the common mistakes while fundraising?
Yeah, I would say that my biggest issue, and this, I want to be fair, right? Which is, my biggest issue is that most founders don't know how to pitch. I want to be fair because, entrepreneurs see thousands of pitches, and entrepreneurs, maybe they only make their own deck, so they only do one, So to me, the one mistake is that they want to be understood. Right, and wanting to be understood is a mistake. Like, you don't want to be understood, because if you put a VC next to an entrepreneur for 10 years every day, and they followed everything you did, they would probably still not understand what you do, because you're probably that good at your job. Right, and you are that specialized, right? So being understood it's a mistake. You don't want to be understood. What you want to do is you want to create a simple if-then statement, which is, you're creating the investor's investment thesis in your deal. You're creating it for them. And the then statement is always exactly the same, which is it's always, then we'll all be rich. Right? That's always the then. So the only thing you have to do in a pitch is you have to establish what the if is. And usually the if is something that you have, right? Which is, I have a unique patent, or I have a unique software product. What do you have? I have a team. I have a unique team. I have a unique mindset, right? What is it that you have, right? And then if you have that, then we'll all be rich, right? So oftentimes people will build 30 slides in a deck, and it's not necessary, and in fact, there's so much information that you don't even know what the simple if-then statement is, right? So to me, you have to boil it down to, like, what is the if? Because the goal of the pitch is to force the person into diligence. And what is diligence? Diligence is just evaluating the if. Is the if true? Or is it false? That's what diligence is. And if you can force them into diligence, you've won.
Absolutely. So, Simon, I would say on the surface, the $5 million round is big, and everyone thinks like it, very successful, and undoubtedly it was. On the other side, most likely you also made some mistakes on the way. If you reflect on those, like, what would be the mistakes that you can think of now?
That I spend time on talking with VCs that they are not giving the value to the product, firstly.
Okay.
And in my opinion, it's like something true. Like we should focus on the big leaders firstly, like big VCs that if they want to invest you, another VCs, big VCs will come to you. And they will be more agreed to invest into your product. In my opinion, CEOs overcomplicating the product. They're, as you mentioned before, they're showing you 30 slides of the product, and investors doesn't understand it, basically. So you should focus only how you solve it and what is unique with your product. And if you will solve these two problems, in my opinion, like it will solve the whole puzzle. And what is the question before, like the main question?
The question was, what were your mistakes actually that you made personally, if you made any?
Yeah, I made few. Like I started, as mentioned before, I started talking with not big VCs that there was in the first one, and I took too many VCs on my board, and I needed to delete them in this stage, because I focused on only few of them. Like I can say, like one of them invests over $500,000, and it was one of the biggest VC from the Asia,